Just one thing. I talked about the jobs report over the weekend, and I talked about a lot of information, the deterioration of the labor market between 2024 and 2023, how we've had 800,000 fewer jobs created in 2024. I talked about the government jobs. The majority of the jobs are part-time jobs, and government jobs are being created as a full-time jobs. This is what happens before you move into recession. Well, another thing I left out, and I wanted to mention it, is here we saw a decline of employed full-time workers by 350,000 jobs month over month. Majority of the jobs that are being created are part-time jobs or government jobs. Everybody's running around telling us how great the jobs report is. We got the sell-off with it. And in fact, again, if you look under the hood, all kinds of problems. And I've talked about discrepancies with the household survey and all the rest of it over the weekend. Continue to get these bogus numbers out of the Labor Department. Who knows what the real numbers are? We don't even know, because they constantly revise the numbers. If that's being reported, then they end up revising them back up. I mean, it's just a bunch of fake numbers coming out of the Labor Department at this point. Now, I posted this on social media today, and again, we're forming, and I talked about it over the weekend, we're forming this bullish divergence with the Fear Greed Index down here in blue, very similar to what we had over here. We had a bullish divergence that marked the bottom over here at the 2023 low. I think we're forming a bullish divergence here that's going to mark a bottom here, but I think we're going to go up and get the final fifth wave. Social media, everybody's now, the herd is now turning bearish. We've now seen the decline in the Dow. We've now seen this big decline in the Russell, Nasdaq, and the S&P 500. Now everybody's turning bearish, and they weren't bearish back at the December tops. I think this is going to mark a bottom right here before Inauguration Day and be head of the Fed, and maybe, again, massive rally back up. Told you it's possible we get a January top, but because the sell-off continues now from the early December highs, it very well may go longer. Again, I've talked about looking for a top in December, January, or on into the first quarter for the trend line to be reached. It hasn't been reached, and my signals remain bearish right now. If momentum flips back to bullish, I think that, again, this will be the final major dip before we go the final climax high and the completing of the blow-off top. But this is causing me to believe that we've seen extreme fear. Now we're coming here into fear again. I think we're going to see this bullish divergence complete and resume the advance. Maybe we go lower, and I think we probably will with the PPI, but then I think we can resume the advance maybe with the CPI, possibly if we can carve out a bottom this week ahead of Inauguration Day, which I think that will be, and then I think we can resume the advance of the election rally, end up seeing another Trump pump. We didn't get the sell-off ahead of Inauguration Day. We're selling off into it. We didn't get the rally, I should say, ahead of Inauguration Day. We're getting a sell-off into it. It's likely that we'll see a rebound. But this is telling us, hey, markets are getting very fearful now. We're getting oversold. Seeing stocks above their 20-day moving average on the S&P, again, formed this divergence. We got the rally with that divergence. But again, we're coming down, making a new low. We're trying to turn up. Again, I still think we could come down here a little bit lower PPI data or try to bottom with today's candle. But I do think you got a good shot of a bottom this week. Whether we go down a little bit lower, we'll see. But again, we are forming a divergence either way you look at it, because we're trying to turn back up with the rally here. Stocks above their 20-day. If we sell off with the PPI, could see something more like that, and then turn back up. We'll see what happens. But again, however, whether today's low holds or we get another lower low with the PPI or CPI, that we could be down with PPI but up with the CPI, a relief rally here with earnings, the banks or Taiwan Semiconductor, whatever the case may be. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site, and you can donate any amount you want. I don't have any sponsors. I turn those offers down. I don't want to sell you anything. I just want a direct relationship with you. So I just ask that you do what you can to help out. I need to hear from you in order to make it work. So if you can partner with me and take a moment to do that, I would really appreciate it. I thank you for that. We have the risk-reward model down here at extremes as we're selling off. Again, it can remain at extremes for an extended period of time, but go flatlined, but As to recycle back up here, we may get the next leg up of the rally that I've been talking about. Again, I've talked about the L8 wave count over the weekend. Here's why I'm sharing this with you right now is because I think we're in a wave 4, and I think that, again, we're likely going to stay above this peak right here, and probably above the July peak, which is just slightly higher than that, and I think we're going to try to rally back up to the upper channel. Now, maybe, again, we get a massive move like we did with the November rally on into December, or maybe it drags out a little bit. The trend line is my target, not a number. For 10 weeks, we failed to reach that level. We fell short of it. I think we're likely going to reach it, and I think that will be the final phase of the blow off top, and then I think we're going to see the bottom fall out of the stock market once that's done. But I remain bullish with the weekly charts, thinking that we're going to get another reference point of a divergence with the S&P 500. We'll see what happens. Signals try to give us a bottom possibly this week. Again, I think we had 4 here. I think we're getting this final 5-leg push higher, and I think we're going to hit that trend line. And I think when we do, I think we're going to see major selling there and drop 20% very, very quickly. Fed will panic, and then they'll give us an emergency rate cut. This meeting right here, they're supposed to pause. It's only been anticipating one cut out of the Fed. It's not going to be the case in 2025, but that's what everybody thinks. Fed's penciling in fewer cuts on concerns of inflation, the 10-year Treasury soaring on concerns of inflation. So there you have it. The 10-year rise by 0.57% today. It's continuing to rise into the resistance zone above this high over here. And again, our high previously towards our high in 2022. This in recent days has been rattling the stock market again, as the stock market has been going down since December. We saw that peak in December. We've seen, let me change that there. We've seen the 10-year yield begin to rise. And we saw that really start to change there in about mid-November, mid to late November. We saw the positive correlation go back to a negative correlation there in November. And again, the yield has been rising ever since the Fed began cutting rates. It bottomed out, and this is causing the Fed, the 10-year, the bond traders are expecting inflation to really begin to rev up here, and Fed is second guessing themselves now. And before the Fed started cutting, the Fed needs to cut, they're too late, they should have been cutting long ago. And now everybody's questioning, why is the Fed cutting? The economy is so strong. The fake jobs numbers that we keep getting, they're so wonderful. Basing economic decisions off of fake job numbers. This is amazing. Worst I've ever seen. Sorry, but it is. Nevertheless, I digress. Why is the 10-year yield thinking we're going to get inflation? Well, part of the issue is the election. We had the election rally with Trump rally there in November surrounding the election. Why? Because Wall Street likes Trump's economic policies. We're going to get this booming economy. I don't care much for his tariffs, but they like his economic policies. Bond market is going, we're going to get the tariffs. We're going to get this booming economy. That's the narrative. That's the thinking behind this. And let me just say, same thinking that the Fed has. This Keynesian nonsense that somehow strong economic growth leads to inflation. The Fed needs to look at them in the mirror because their policies are inflationary. That's why we're having this sell-off. I'll be watching. Does the 10-year yield continue to surge, or does it try to top soon? These negative divergences that are forming as we have bullish divergences forming in the stock market. You have this larger one here. You've got them on things like the histogram right here. You've got it. You can see the histogram. You got it on things like the stochastic down here in the most recent price action. So we do have some divergences that are developing. They are size pushing slightly higher, though, than the previous peak. But again, you don't have to get a divergence. May just reach an extreme. So we'll be watching. But again, this continues to rattle the market. So something worth paying attention to. The 10-year is going to start dropping. And the stock market will probably, when that happens, the stock market will rally, get the final climax rally, the final phase of the blow off top. And the stock market will peak and it will begin to join the 10-year and it will drop. But this is the first time in history you have the Fed having dropped 100 basis points, and we're surging beyond that for the 10-year yield. Why the Fed, part of the reason why the Fed is second guessing themselves. In the bond market, the Fed, they all believe, we're going to get this booming economy. And in fact, Trump is likely going to inherit a recession because the recession signals are already flashing. Same recession signals that the Fed dismisses. Now, we're seeing the Dow up, we're seeing the Nasdaq down, okay, and that we were down much lower at much lower levels with the S&P, and Nasdaq was much lower. It rebounded. Nasdaq still negative, but the S&P was negative most of the day, and then it closed at the end of the day positive. The Dow up 0.86%, up 359 points rounding up. Well, the Nasdaq down. Again, this could be correct. If the Nasdaq stops making new highs, and sometimes you get the divergences between the S&P and the Nasdaq. And remember, Nasdaq went higher, while the Dow and the Russell and the S&P were all moving lower. Remember that? It peaked finally in mid-December. Well, the Dow peaked December 4th, the S&P December 6th, the Russell peaked late November on the 25th. Watching if the Nasdaq ends up trying to make new highs. Remember, we got that topping tail in December. We're watching to see what happens in January. Will it be confirmed? Will we stop making new highs, or will we get a big counter turn back up? The Dow is very oversold, so is the Russell, and they very well could be bottoming out. But again, going to be watching this. The VIX was down 1.79% today, still hovering above 19. And we had the Russell up about 0.25%. And remember, is at a major level of support. Quickly, here's a Dow, and again, I talked about the divergences that are under construction here, okay, and again, now we're seeing this bounce on the Dow, and we'll be watching to see if we attempt to rebound, and then I'll be watching if we do see a rebound in the Dow here, do we stop making new highs, and does it end up making a lower high, or do we get one final push higher, and does it end up diverging with the transports? Or maybe the transports moves higher and the Dow moves lower. The principle of confirmation in Dow theory is they have to both confirm one another. I'll be watching if the Dow stops making new highs, or if it makes a new high, does it end up diverging with the transports? We've got these divergences that I think are going to give us a rally surrounding the inauguration. If we had a rally ahead of it, it could be a sell the news event, but because we've been selling off since early December, we've been selling off for over a month now, it could be an event now, the final phase of the blow off top, because we haven't reached our target level. We got the bullish divergence on the histogram and RSI and other indicators. And I think you're going to get a rally, and then we'll see if Nasdaq participates. The S&P is still going to go to new highs. I'll be watching the Dow. I think the Russell has already peaked. The Dow has lost over 7%, 7.2% with the bullish divergences now in play. We filled the presidential election gap here. Again, we're likely going to see that rally resume. The question is, do we go to a new high or not with the Dow? I'll be watching. But again, we're at this horizontal support area here, just above it here. So again, we'll be watching to see if we try to find a bottom in this area. Maybe we have already. If we continue lower, you've got your 200 period down here. The Dow turned off that weekly channel. The S&P never reached it. The Dow and the Russell turned off their upper channels. Nasdaq fell just shy of it. But again, here we are. We tried to dip below the 50 level on the RSI in the weekly time frame. I think you're either going to come up here and try to go up back into that trend line one more time, or you're going to get a lower high. But again, I think that the big sell-off with the Dow and the Russell could be suggesting, again, that we get a resumption of the presidential election rally surrounding Inauguration Day. I think that that is likely. If we can bypass the recession, if we can bypass the inflation scare, the CPI and the PPI, and then going into the Fed meeting, it's possible that, again, we rally all-time highs on the S&P, maybe here in January, on into February, or at some point in the first quarter. I talked about possible top in December or January. It could drag out into the first quarter. I think we're going to get a recession in the first or second quarter. I think it will begin to show up, or it does about 2 or 3 months or so before it shows up. The stock market will peak and begin to price in the recession, and it'll drop immediately 20% once it peaks. But I think we're going to get the final climax move, the final phase of the blow off top for the S&P, and I think the Dow is going to rally back up, and we'll see. Does it get a lower high back testing this trend line, or does it go back up to this trend line? I'll be watching the Dow, but turning back up, trying to anyways, off the 50 level there. We close the week out with the inflation reports. We got Taiwan Semiconductor for the tech sector. Do we see rotation? Do we see the Dow the S&P try to rebound back up, but yet lack of participation with the tech sector. We'll be watching to see how it unfolds. The bullish divergence. Again, I just want to say this. I warned you back in early December about the divergences that were forming. And again, the S&P went sideways. We got a big sell-off on the Dow and the Russell, and then a bigger sell-off on the Dow and the Russell, and the S&P played catch-up, but we haven't seen as big a drop on the S&P 500. Now we're getting the bullish divergence. It's the opposite of what we had in December. And now everybody's starting to turn bearish. And again, nobody was bearish back at the December top when I was telling you about these divergences and the ones on the 60-minute charts and told you, hey, getting a correction in early December there. But then we formed the triangle on the S&P, and I told you it can have an upward resolution or a downward resolution. And if it breaks down, which it did with the Fed, reducing the amount of rate cuts from 4 to 2, penciling in the amount of cuts for 2025 to down to just 2. Then we sold off and broke down from that triangle, got a bigger sell-off with the Dow and the Russell as well. S&P playing catch-up. Nobody believed back up there that we were going to go down. We talked about the divergences. I expected some kind of sell-off, watching the triangle on the S&P to see which way it would break. The market a bigger tumble. And then right after that, we saw, or with that Fed meeting, the reversal bar that day with the Nasdaq. Remember the big drop to the bearish Harami candle pattern that we talked about the day before the Fed meeting. Hawkish cut out of the Fed. So I'm watching to see, are we going to attempt to rebound here again and have these divergences begin to play out? The bearish divergences here on the Dow and on the Russell, intraday ones, and we had that on the S&P as well. They warned we were going to get a corrective move. Maybe a top for the Dow and the Russell. The same warning sign here on the Russell. The Russell's come back to the 200 and this trend line here, bullish divergence. And I think the Russell could try to bottom, rebound if we begin to see momentum signals turn back to bullish. Great Scott, did you hear what I said? We have to see momentum turn back to bullish. And if it does, then we can rebound back up. And we had that bearish divergence on the MACD, the histograms forming a bullish divergence, the RSIs. And again, look at this. We're hitting the 200. We dropped lower, but then we hit the 200 and we bounced. We've now dropped nearly 12.5% for the Russell. So I think you're going to try to form some kind of bottom, possibly around this trend line here, our 200 period moving average for the Russell. That could be a major signal. Again, over here it was that the Russell was bottoming at the 200 period. Here we are at the 200 period again for the Russell. Here's a channel, and again, we've seen the Russell hover around the 50 level, and is it going to try to firm up here and go back into positive territory? We'll be watching, and again, I think it will diverge with the S&P, much like what we had over here. I've talked about that at great length and detail. We had the Russell and the Dow both hit their upper channel lines. The S&P never did do that. I still think the S&P will move to a new high. And usually is what you have happen is you have the Russell diverge with the S&P 500 to market top, and that's what we had over here. I think you'll see it again. Told you over the weekend the S&P might come down to this trend line right here in the weekly time frame and tag it and try to bounce. Again, it's very possible we're now completing a divergence, or maybe we go a little bit lower with the PPI, but then try to rebound with the CPI. Sometimes it works out that way. Sometimes one report, you're down one day and then you're up the next day, but we'll be watching. But if we can get traction here surrounding our 20 period, we're just below it, and the trend line, again, I think you're going to go back up here, and I think, again, you'll move here to the upper channel line to complete the blow off top, getting the final fifth wave higher. And again, everybody is going to turn extremely bullish. People are bullish back at the December high, very, very bullish, saying this, this bull market never going to end. We're going to rally, continue to rally and everything, and then we sell off sharply. We're still not below 50 here on the RSI, and again, if we bounce here, could go up and get one more push higher for a divergence, possibly a lower high. My guess is, again, that we've not seen a peak yet on the S&P 500, although I believe we have one on the Russell, and I think is still out on the Dow and the Nasdaq on that, watching this next rally. But again, it is possible Nasdaq will diverge with the S&P. Certainly possible. The 2022 high over here, S&P went slightly higher. Nasdaq did not. The Russell did not. But we'll see if that happens. Again, it's very common. Again, we have this divergence. Could we get another reference point? We'll be watching. But here, testing the trend line, trying to bounce anyways, as we form bullish divergences on the 60-minute charts. By the way, just real fast on that Dow sell-off that we've had, I'm watching this divergence between the transports and the Dow, this larger one from 2021. And again, do we get one right here in the most recent price action where the Dow goes up higher and diverges, or do we get the transports trend to go higher and the Dow making a lower high? Again, going to be watching to see if we get a divergence between the two, whichever one makes a new high. That will likely signal a top in this most recent price action, but we'll be watching. Moving into earnings season too, and again, we've got banks, we got Taiwan Semiconductor on Thursday, so we'll be watching to see how all that impacts the semiconductors with Taiwan Semiconductor. Here's what happened. We had the gap lower, and then we recovered back up to the 200 period moving average. We ended up closing positive, filling the gap. So that's where we're at on the 5-minute chart. If we sell off, I'll be watching the low here. Does it get taken out? Are we not finished with the diversions? But we'll be watching to see how we close in the weekly time frame by the end of the week. And if, as I said, if we can get back above the 200, either immediately with the inflation data or pull back and then do it with the PPI session or with the CPI, we'll be watching it, or maybe later in the week, be watching to see if we get back above that 200 period moving average here in the 5-minute time frame. But you do have bullish divergences developing on the 15-minute chart, as I talked about over the weekend. Again, we've got the bullish divergences that gave us this bounce here today. Again, we'll be watching to see if that carves out a bottom there, or we go a little bit lower and we finish forming a bottom. And again, we might get another test of this low and take it out and form a triple bullish divergence. We'll be watching. We formed that triangle. Remember, again, our signals turned bearish as a triangle right before it began to set up. And then I told you it was either going to break down or up right before the Fed. We had a downward resolution, and that's given us these sell-offs over and over off of this trend line here, connected from that peak. We sold off there, and then we sold off there. So again, we'll eventually likely come back to that trend line, try to get back above it and challenge the highs. I think we'll move to a new all-time high. But could we forming a bottoming process here, either with another leg down or with today's low at that trend line of support? We'll be watching what happens with the inflation data, a relief rally, or do we get a hot report that moves us into inflation freakout mode and we bottom out maybe with the CPI or shortly after the inflation reports if we end up selling off with both of them. But I do think, again, you got a good shot of a bottoming process at the head and shoulders on both Bitcoin and the S&P. Both those patterns are going to end up filling because I think we have a wave 4 on both, as I talked about over the weekend. Video, if you didn't watch it, my last update, I'll link it at the end of this video. I talked about the wave 4s on Bitcoin and on the S&P, and I think once they're done, you're going to get the final climax move for the blow off top. Talked at great length and detail about our gap fill from the presidential election results. We had the gap fill over here. I told you about this bullish diversions right before the election. Remember that? And we are bouncing off of the horizontal support in the 50 period moving average. Again, I told you we were likely going to see a rally surrounding the presidential election. We got it. We got that big gap higher. Well, that's the gap we came back and filled today, right there at 57.83. So we now have this gap fill. And again, it may not be done, but forming this multiple point divergence. This divergence gave us the bounce back to the 200 and the trend line. This divergence right now is filling our gap. It may not be done. But again, you have this multiple point divergence. The divergence over here gave us the rally back to back test the triangle there. So this one will probably produce a reversal, but it may not be done yet. Great Scott, did you hear what I said? It may not be done yet. The momentum signals are still bearish, so we've got to see that change. And then we'll be watching, do we get above the momentum cloud here, the momentum line, and start seeing things turn back to bullish? Here's the 50 and the 200. Do we start seeing price get back above both of them, and then eventually a bullish cross following? Here we are filling the gap. The Dow already did it. Nasdaq hasn't done it yet, but again, I told you over the weekend to be watching these divergences as they carve out. We could go a little lower and fill that gap. Don't think we're going below the July peak at 56.70. I think we're going to hold above that horizontal support. But here you have another reference point of the divergence on the MACD and on the RSI. So again, I think you're going to carve out a bottom. And maybe we did it today with the gap lower if it's a gap and trap and we start moving in the other direction. We do have another downward trend line right here that we're coming up to and just stalling there right at that trend line right there. I'll draw that in a little bit later. But Watch these bullish divergences, and we got one in the most recent price action with today's low filling our gap. So we fill the gap over here. We fill the gap over here from 57.83. Now we got these gaps up here. We'll be watching these gaps to see what becomes of it. Now, again, you got this head and shoulders. Bitcoin's doing the same thing, starting to break down. And, the conventional wisdom is, everybody's getting super bearish now. They weren't bearish when these negative divergences were forming back at the July, back at the December peak. And I told you we had the triangle here, and maybe that's it if we can flip it around, or triangles can break either way, up or down. If it breaks down, we get a bigger sell-off on the Dow and the Russell. If it breaks up, then again, try to hit our trend line. But we ended up having a downward resolution. The signals remained bearish. Did you hear what I just said? They didn't flip. The Dow, the Russell signals remained bearish. The S&P was going sideways, and we had a downward resolution. The divergence here in the 60-minute time frame played out, and we had those divergences in the daily time frame. Remember on the Dow and the Russell, I've talked about those. I think this is going to be a fake out on the head and shoulders. It's still possible it plays out. If it does, then the S&P can move back to the 55.61 towards the 200 period moving average. So let's take a look at the daily chart. And I'm putting the Elliott wave count on this chart to try to help you understand what I'm thinking. And again, don't show you Elliott wave very often. I have other counts that are going. Counts get invalidated. I don't trade it. I just try to use it for direction. But I'm putting it on here because I want you to understand that, again, I think we're going to get the final phase of the blow off top. I think this is a wave 4, and I want you to understand why I think that. I could be wrong. We may get a bigger sell-off. It's possible we topped in December. I need to see more evidence of that if that's going to be the case. But we're getting very oversold right before Trump's inauguration. Could be a continuation. We come back to fill the gap. It could be a continuation now of Trump pump. I've marked it here. Here's the day of it. We had the presidential election rally, and on social media they're calling it the Trump pump. Could we see that Trump pump resume surrounding Inauguration Day, but then pop out with the Fed, or at some point surrounding earnings? We're now moving into earnings season here. And like I said, again, I get a top when we reach that upper boundary of the channel, but over the last 10 weeks now, we haven't reached it. We had the rally, and we fell short of it in November. We fell short of it in December on the weekly chart, and we had this move here, setting up this head and shoulders. So close but no cigar, and I'm wrong, and we don't reach that level, or do we end up reaching it? I've been playing around with different trend lines right here, as I've been talking about. If we bottom right here with the gap fill on a bold black line here, if we go a little bit lower, I can adjust the settings, but again, I think that we could see a big rally like we did over here on into November and December, and I think we can go up into the 6,300 range. Looking at around 63.42 as a target level. We may overthrow it, but again, going to be looking for a channel to develop here. And again, just going back to what I was saying about Elliott wave, I think we've got a 1, a 2, a 3, and this is a 4, and then I think we'll get a 5. That's what I think is going on. The risk is we continue to drop. We take out horizontal support at 56.70. We come down to the 200 period moving average. The measurement of the head and shoulders is down to the 55.60 area. So again, going to be watching if we go down to the 200 or not. Russell is added. If the Russell starts losing the 200 and staying below it, be extremely bearish. The Russell is trying to bounce off the 200-day moving average. Could be we fill the gap here and try to resume the advance if we try to bottom surrounding the inflation data here this week with the S&P. As I told you, I think there's a very good chance that happens. I don't think we're going to take out the July peak, but I have the guts to tell you what I think. Right or wrong, I have the guts to tell you what I think. Most people tell you things after they already happen. Everybody's now getting bearish on the sell-off. I told you back over here about these divergences on the daily charts and on the 60-minute charts we just looked at. We talked about them back at the beginning of December. We ended up correcting in a triangle at first, couldn't continue higher, a downward resolution with the Fed. A bigger sell-off with the Russell and the Dow. When the Nasdaq peaked is with that reversal bar with the Fed. People tell you things after they already happen. And again, I told you about these warning signals back at the peak. I told you the triangle could break either way. Triangles can be continuation patterns or they can be reversal patterns, one or the other. Never know which it will be. think we got this 5-leg push higher. I think we'll complete this 5-leg, and I think this whole thing is the fifth wave here that can complete the primary wave and a cycle top and bring the final phase of the blow-off top to a conclusion. Getting a blow-off top, I don't think it's done yet. Markets end in blow-off tops. Quickly, we have divergences on the histogram, things like that. I think that will allow for the MACD to get a bullish cross soon, and we have divergences developing on the stochastic and things like that. NVIDIA got a hollow red candlestick today after selling off, gapping lower. We'll see what becomes of that. Still ended down about 2% in an MACD crossover. So again, do we have a possible little miniature double top right here? We'll be watching NVIDIA at the trend line again from the June peak over here. Nasdaq, we got these bullish divergences. Nasdaq ended down still 62 points, down 0.30%, but again, it hasn't filled the gap. The gap is lower. We'll be watching to see if the presidential election rally over here, that gap gets filled. 20,227. Again, we've lost the 50 to 200. They've got a bearish cross going on. Gapped lower, rebounded back up, but still negative for the session. We'll be watching to see. Get a tech sell-off with the earnings this week with Taiwan Semiconductor and the semiconductor stocks. Heavy on NASDAQ, or do we get a rebound? Now, Bitcoin rebounds, again, we still have MicroStrategy that can be an influence on NASDAQ, and thing has big swings on it. NVIDIA and MicroStrategy could influence NASDAQ, and if they start going in other opposite directions, there could be a tug of war. We'll be watching. Bullish divergences are in play here. Have we peaked with that topping tail we got on the monthly time frame? We got it in December. And again, here is a bullish divergence as well in the MACD. So can we bottom out? Do we go a little bit lower with the PPI, but then bottom out? And then we'll be watching. Do we stop making new highs if we do rally back up? Or do we invalidate the topping tail in the monthly time frame? 60-minute share to the Nasdaq 100, pardon me. I told you, I think the S&P rising wedge here, the rising wedge that we had right here, is evolving into a channel. Okay, that's what I think is happening. We broke down, and I think we broke down, back tested. I think it's evolving into a larger channel that will eventually go up and hit the upper boundary of the channel, depending on where we bottom here or a little bit lower. I think we'll have a channel in place and go up and hit the upper boundary of it, and I think that'll allow us to reach the upper channel in the weekly time frame. I think they'll be right around the same area, currently around that mid 6,300 area. Now, the NASDAQ had a rising wedge as well. Here it is on the daily chart. We had this rising wedge. We overthrew the upper boundary, and then we came down and we tried to break it, couldn't do it, broke down again, and we back tested it here. And again, now we're at this horizontal support from the July peak. So again, going to be watching. Do we go a little bit lower? Get your 100 period moving average down there. And if I show you price bar, let me get this out of the way here. Horizontal support out of the way. We have the 100 period. We're at the cloud, the trending cloud, and we got a hollow red candlestick today. So again, could we be bottoming out? Same thing with the Nasdaq 100. Again, I think you got a possible structure if we can make new highs of 1, 2, 3, 4, and then 5. Or if it's already peaked, you can go 1, 2, and then 3, 4, 5. And again, like I said, Elliott wave speculation, and again, different counts going on. So all these Elliott wave experts, they all disagree. Whenever I talk about, and I don't talk about Elliott wave very much, but when I do talk about it, I always get somebody contacts me and wants to straighten me out and tell me their count. And Elliott wave is speculation, but I'm just telling you, the only reason why I'm showing it to you right now is because, and normally I just keep it to myself, because I think we're going to get that final fifth wave for the blow off top into the resistance areas I've been talking about. That's why I'm showing it to you, why I still think we're going to resume the advance. If this is wave one, NASDAQ should stay above this area, and that's what I'm saying with that peak with S&P. I think it'll hold because right below that you have the wave one for the S&P 500. So again, I'm looking for a bottom in this area, and then we'll see, does NASDAQ make a new high or not? We'll see what happens. Is this corrective, or have we peaked? And we'll be watching for clues. And then you got to get your MACD back into positive territory here. Again, you got the bullish divergence on the histogram. You've got possible bullish divergence in the more recent price action for me here on the stochastic as well from these lows. where we try to bounce off our 50-period moving average. Everybody is getting extremely bearish right now on social media. And again, that reversal bar with the Fed. Here's our inside day with their bearish harami. Gave us, again, that topping tail on the monthly. Sentiment is getting very, very bearish.